Hey guys, Akil here, and welcome back to another Trading Edge video. I hope your weekend has been going well, and well, if not, I hope it's doing a little better now that you've got the notification or the email that the Trading Edge is out. I know if you're anything like me, when I was going through that phase of trying to figure out why I'm struggling as a trader, that these type of videos, these type of notifications are what I live for each and every weekend for a few different reasons. Either to A, get some analysis on the market and see how well it meshes or matches with what I was doing. And B, get an opportunity to learn, right? And that's one of the reasons I continue to do these freebie videos for you guys. It helped me massively on my way to becoming a consistently profitable trader, and hopefully it's doing the same for you guys. I guess I should do an introduction. If you guys are new, my name is Akil Stokes. I am a professional currency trader. I'm also a trading coach over at tier1trading.com. I'm also host of the Trading Coach podcast, and this Trading Edge video, this is a video that my trading partner Jason Grayston and myself put out each and every day to our tier 1 clients. Jason puts it out typically on Monday and Wednesdays. I come in on Tuesdays and Thursdays. And then when I get a chance on the weekend, as I mentioned before, I like to put a free version together for you guys that are only subscribed on YouTube. I actually have a big announcement for you guys that are only subscribed on YouTube that want to, well, I'll talk about it a little bit later. But I've got a big video for you today. We're going to look at about 14 pairs, right? And then I have a good announcement for you as well. And I'm going to do something a little bit different. Typically in these videos, the ones that come out during the week, I like to focus on quality over quantity, meaning that I really like to dig in on a few specific trading opportunities and really go into detail about how I'm approaching them, what I'm looking for. Today's going to be a little bit different. You see, the Forex market is basically a 24-hour market. So there's, aside from the weekend, right, there's never any period where price isn't moving. So Friday afternoon, and if I can sneak on it Saturday or Sunday, if the kid disrupted me, I like to do a full analysis of the market, specifically on the higher time frames, and really game plan for the week ahead. So I'm not really looking for trading opportunities. Obviously, if they pop up, I'll jot them down. But I really like taking a bird's eye view of what's on the radar. I take very detailed notes, and I have a nice little checklist of what I need to watch for the week ahead. And this week, I want to share a little bit of that with you. So we're not going to go into a lot of details about these setups. I'm sure I'll slip into it at some point. But if it moves quickly, of course, you have the option always to rewatch this video, but I'm also sure we will revisit many of these opportunities during the week in the weekly Trading Edge videos as well. So let's get started, and we're going to start off on the pound dollar. All right, so the pound dollar is going to be short and sweet, really, because we haven't really done much on this pair for like the last 13 days. I mean, literally, look at the chart. This is the daily chart I'm on right now. We've been in consolidation for the last 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12 days down at this VS1 level. The VS1 level is the blue boxes here on your screen, and that represents a visual level of structure. What we're waiting for here, and this is what we've been waiting for in the live room for the past couple of weeks, is really for a decision to be made. I call these levels in the market decision points because, well, at this location, I can't really trade it much. We did catch a few good advanced pattern formations in here, and typically consolidation breeds pattern formations, and we'll see examples of a few of those later. But as far as any directional moves, more like trending moves, either bullish or bearish, we really need to wait until the market makes up its mind on how it wants to react at this previous level of structure. Now, this pair, right, although we're seeing some divergence on the RSI, this pair is setting up to look like we're going to break out to the downside. If you follow the fundamentals with pound weakness, dollar strength, you would probably lean towards that way as well. So what I'm looking for, the question I'm asking myself when I look at this chart is, if we're going to break to the downside, where is the next potential spot that price can go to? And the level that I have on my radar is going to be right down here at about $1.33, right? You look left, you can see previous structure, support and resistance there, right? You see support, support. You have levels of resistance, 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 a little bit lower than that. But you can see this is a place where in the past price has respected it on both sides of the structural level. And right now, again, this is the broad weekend analysis. I don't know how I'm going to trade this yet, but this is something that I marked down for my intraday trading. And I say to myself, if we can violate this level, that means there's opportunity from about 134.50s to about 133 even for bearish movement, right? So if my math is right, that's about 250 pips. No, 130. What did I say? 134. 150 pips of potential movement here on the pound dollar. So this is certainly a pair that I'm going to have on my radar for intraday trading, and see if I can catch this during one of our day trading sessions, either on a lower time frame or something like a range bar chart, and catch a small move down to this next level of previous structure support. Let's head to the pound yen next. Okay, so the pound yen is another pair where I don't really have a lot of higher time frame interest. The market is essentially just coiling. You can actually see a good example of this if you go ahead and draw an array here, right? We can take a line here, and you can see that the market is essentially just coiling and coiling and coiling, meaning that it's creating a tighter and tighter range here on the daily chart. Now, eventually we'll pop out of this range, but we could look for the expectation for the top side here to be tested once again. You can see we have 3 tests on the bottom, 1, 2, 3. We have 2 tests on the top. It would not be surprising at all if we got another run up to that line up top. And what I'd be looking for on the lower time frames here, or what I'll be putting on my radar as we go down to the 240 chart, is any type of directional move in that bullish direction. And as you can see here, price has just broken a level of previous structure resistance, right? If I draw a straight line in from right here, you can see previous structure support, traded below, found resistance. You can see this candle right here that tried to wick above it, and the sellers beat it back down. And that level proved to be resistance in the past, And here's what's interesting, right? We look at the wicks here. If you guys have taken the foundation course, right? I did a full training course just on candlesticks and price action. And trust me, it's a lot more, it's different than what you would expect. It's not your typical Japanese candlestick formations. More of the psychology behind candlesticks and reading the different strengths and stuff like that. But here's what's interesting, right? You can see the wicks to the upside here, testing resistance, probing it, and getting rejected. As soon as we have this high momentum candle that breaks through it, right, this level of previous structure resistance is then tested as support. And each time the bears try to make a run at this level, what happens? Make a run, reject it. Make a run, reject it. And now we're right back at this level. So something that's going to be on my radar for the Sunday open and really Monday intraday, that is, if the London session, right, the London traders don't take advantage of this opportunity first, is a buying opportunity right at this level. Obviously, depending on what price action does on the open, if I get a buying signal. But a buying signal at this level and a chance to trade this up to our next level of previous structure resistance, which is going to be right above the 150.50 level, and then ultimately to our upper trend line here as well. So that's what's on the radar for the pound yen. So next is a trading opportunity on the dollar yen, and this was one of our best setups for the week. We actually called, you're not going to see it here, if we go down to the 240, and I'll pop back up. We had a nice ascending wedge here, right? Ascending triangle, I should say, excuse me, where price action, and this is a simple breakout pattern where price action retests the highs, creates less strength each time the sellers try to push down, and eventually we get a breakout. And you can see this time we actually had a breakout and a retest. And bigger picture, we were looking at a move to about 1150s. We haven't quite gotten there yet, but we can still push to that level, 1150s here on the dollar yen. And aside from that, there's not a lot new here. We can continue to look for intraday opportunities up to that 1150 level. But I want to bring this up because I got a few questions about this. I shared this specific trade on TradingView as well, the TradingView platform. And there were a lot of questions about, hey, Akil, don't you think the dollar yen is bearish? Because let me just load up some more data here. Don't you think the dollar yen is bearish because we've just broken out the sideways consolidation to the downside, right? Isn't that typical sign for a bearish break. And yes, and we were all over this for bearish opportunities. We actually had a pretty decent trade, didn't get extended targets hit, but we had a really decent trade taking advantage of this break of consolidation. However, as we retested this level, if we were, and this is of course my opinion, right? All of this is my opinion. If we were going to see a continuation in the bearish move, we would have seen resistance hit right around here, right? Resistance hit right around here at the lower end of our previous structure support, and we just didn't get that. We blew right through. We even blew through this minor level right here. So, in my opinion, I think we can. I don't want to say easily. I think it's not out of expectations. I think that we can come across this whole channel and retest the highs up here at about 114. Now, will we continue long after that? I have no idea, but just based on how price action has moved, I would not be surprised if we saw a test of at least this 112 level and possibly this 114 level. So really not anything on the radar. Again, intraday, we can continue to look for moves up to that 111.50 level. You can see as we keep pulling back, maybe we get another lower time frame opportunity where we come back into 110.40s and then get another extension up. But I just want to bring this pair up just because there were a few questions about it on the TradingView platform. Therefore, I figured that a lot of traders, or at least more traders, may have questions about kind of my mindset on this pair as well. So the loonie, or the dollar Canada, is another pair similar to the pound yen where we're starting to see a little bit of consolidation, a little bit of a coiling effect. And I'll show you what I mean. We were in a very strong bearish trend really coming off of last year. And we started to consolidate the lows and really put in a reversal pattern, right? And we essentially invalidated the previous trend right here. And we got a valid bullish move right here. I teach a 3-point move for identifying trends, so validating a bullish or a bearish trend. And you can see we have this 3-point move of extension, pullback, extension, or initial structure high, outside return, new structure high right here. And then after that, we go back into consolidation. There's a nice little head and shoulders pattern in here for you guys that have been following us on a regular basis, which is a reversal pattern that comes at really an exhaustion point in the market. And then we've started putting in another outside return, and we're kind of sitting pretty right in the middle of these highs once again. And if we were to bring out, say, like a trend line or anything like that, you can see the coiling effect take place, right? Where price action is, instead of expanding and getting wider, it's getting smaller and smaller and smaller and smaller. And once again, these type of price patterns, price action patterns, form advanced pattern formations. And as we go down to the lower time frame, you're going to see that we have a few on the radar, but we're going to focus on the small one because this is the most immediate right here. And you'll see, right, if I take our last impulse move, right, just go right here. This is going to be our X leg. So this is essentially the starting point for an advanced pattern formation. That first move is an X to A. You can see our first move up, our retracement up. That's going to be the A to B. This is a very deep retracement for the Gartley formation, as you can see, which I personally prefer because it's going to, well, I'll show you, it's going to limit my risk. This is going to be our B to C leg right here, and then our C to D is going to be right up here at about 129.78. And once again, you can see stops are going to be very tight, offering me, and you can see that's going to offer me a very good risk reward, with my risk being only about this much and my reward, at least to initial targets, being about double that. So about a 2-to-1 risk reward, or 1.5-to-1 risk reward for as far as a Gartley formation goes, or advanced pattern formation in general. That's a pretty good get on this. All right, so since we kind of touched on the rules for identifying a trend and knowing if we're bullish, bearish, or one being violated, I think it was the perfect time to take a break and share a few of that big announcement I had. All right, if you guys remember, late January, we launched the new trading platform, tier1trading.com, trading platform, educational service, community service, whatever you want to call it, or just call it the all-inclusive resource for traders, right? And we did a free week where we taught a lesson called Emergence. And for the longest time, a lot of you guys, the recording went away in about a week, as we told you, but a lot of you guys didn't have a chance to see it. You've been asking, is there a way to see it again? We finally brought it back for your viewing pleasure. We actually did you one better. if you scroll down here on the chart, you'll see a little tab that says start a 14-day trial, right? When you start that 14-day trial, not only do you get access to that Emergence training course, right? That full training course that we did call Emergence, but you get access to our live rooms, you get access to the daily versions of these Trading Edge videos, and you also get access to our custom software, like the Enigma software that you just saw me use to draw out the pattern formation. So I'll put a link for that underneath this video so you can click it. Obviously, you can just go to tier1trading.com and you'll see it. But it's finally here. I apologize for the wait, but again, we've been really focused on getting things right for our clients, right? We're continually producing training courses. We're continually producing just content and updating the website to make it better for our clients. So no offense, but you guys will always come second. The client, the paying client comes first. But we finally were able to get this up. So check it out and start your free or your $1 14-day trial right away. Now, back to the charts. The next pair I want to focus on is the Aussie dollar. And Aussie has been an awesome pair because we made 2 great calls on this pair last week. You can see that price action is consolidating here on the daily. We're actually right below previous structure. We thought that we may see a continuation down to the 74-cent level, maybe a little bit lower than that. But price action just didn't get that follow through, and we're actually starting to put in one of those classic reversal patterns called the head and shoulders pattern. So as we go down to the 240, I'll show you what I mean. We had 2 great calls here, right? The first call was prior to the head and shoulders, right? As we retested what we predict will eventually become the neckline. We retested this level right here, had a nice double top, nice 26.18 trade, and we ran that all the way down to test the previous left shoulder over here. We also talked about taking advantage of this right shoulder, and you can see it on the lower time frames a little better, but you have these tweezer bottoms right here. This is essentially a double bottom in the market, and you can see RSI divergence, and that made for a nice counter trend trade as well. The next opportunity, we may put in an advanced pattern. I haven't looked at this part yet. Not quite there yet. We could put in a potential advanced pattern formation, but the next opportunity here is taking advantage of that head and shoulders pattern. The head and shoulders pattern looks something like this, right? We have a left shoulder. We have a head. Ooh, get that going. Head down here. We have a right shoulder and we have a neckline right here. Now, I don't personally like the slanted necklines, but it's not too bad. And if we are going to see a reversal, what we're looking for is for this neckline to be breached and then for price action to continue up. Now, for you guys that are members, it's still coming. June 1st, that's the date I told you. I'm creating a head and shoulders course where we're going to talk about not only teaching the pattern, not only teaching the psychology behind the pattern formation. This is one of the classic charting patterns. One of the best classic charting patterns. But we're going to teach you 3 ways to trade it. Obviously, a super aggressive way, a more conservative way, and then a more of an ultra conservative way to trade it. And that's still coming June 1st. I've got it almost done. I just haven't started recording it yet, but I've got the outline done. You guys know I've been digging into combining that with the RSI and looking for some clues to get involved with the right shoulder. So June 1st is the date on that. But head and shoulders pattern is the next thing I would look for here on the Aussie dollar. If we do get that, we can certainly look for a run back up to about 76.50s here. Let me just see something real quick. Maybe even higher than that. Yeah, 76.50s, that's going to be the more conservative level, but maybe even 77.50s depending on what this break looks like. But that's what we're looking at on Aussie dollar. All right, so New Zealand dollar is another pair that's coming down in the previous structure support. You can see the circles right here. This is a previous level of structure consolidation where price action dove down to this level, put in a little bit of accumulation down here before reversing, right? And again, we've consolidated back up here, kind of a classic market cycle. This is a picture perfect one. But we've come back down to that previous level, and I would expect the same. Not necessarily a break to the upside, but I would expect some type of consolidation. And as I mentioned before, consolidation can be very tricky for many traders, and obviously it depends on what your trading style is, but many traders look at it and they just see a bunch of junk, which sometimes it is a bunch of junk, but hidden in this bunch of junk is where we typically see advanced pattern formations, where we typically see these advanced pattern formations work best, because they are formations that form during accumulation and distribution. They don't necessarily, they do form during trending opportunities, but mainly it's when smart money is trying to accumulate positions in the market where you see that type of choppiness happen. And as we go down to a lower time frame here on the 4-hour, you're going to see that we actually have two. One's going to stand out for you. One may not. We'll start with, let me just delete my stuff here. We'll start with the most recent one, and this is going to be a potential bat pattern, right? We take our impulse leg right here at 69.88, swing high to swing low, X to A to B, B to C, excuse me, a Gartley, not a bat. We must have just touched the 50% level. But X to A, or the 618, excuse me, X to A to B, B to C, C to D right here at 69.62. And if we just click our Enigma thing right here, you can see we're going to have a cipher as well up at 70.10. So two potential advanced pattern formations here on New Zealand dollar as we start to consolidate at that previous level of structure. Aussie Canada, this is going to be another quick one, just like New Zealand, just like Aussie dollar, are consolidating at previous structure support. Just as I mentioned in the past, perfect opportunity to look for a few advanced pattern formations. You can see maybe even a slanted neck, head and shoulders as well down here. That already would have had your break, so I wouldn't worry about that too much. But you can see, just go ahead and click our Enigma tool right here. You can see two potential, or I guess one potential advanced pattern formation, all depending on what leg you're drawing from. These legs are essentially the same thing, but it's going to show you both just in case you want to take this leg or that leg. So you can see a potential Gartley formation that almost got filled on Friday, up at 96.94. So something that you might want to pay attention to on the open. Let's just see, we may have a potential cipher there as well if we get up a little bit higher. If we do spike up to 96.94, we may have the C leg of a potential cipher pattern as well. Let me just measure this out. Maybe we don't. Yeah, depending on how far we retrace up. If we do stop on a dime right here at 96.94, so we hit that Gartley decompletion and roll right over, we may have a case where we have back-to-back pattern formations with a cipher pattern down here as well. And again, while the market is doing that chop, that accumulation and distribution, the consolidation, I should say for you guys, this is what we typically get. So it wouldn't be shocking to go from one to another. And we're going to see a pair, well, I'll just show you a pair like that as well. If we go over to, I think it was New Zealand, Canada, New Zealand, Swiss. Yeah, New Zealand, Swiss. This is going to be pretty cool. I think this is it. Let me check my notes. New Zealand, Swiss, blah, 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 blah. Yep. So New Zealand, Swiss here on the daily. Or let's just zoom out. You can see that this is a perfect example of consolidation, right? For you guys, and you'll see this when you take the Emergence course, but the simplest way to identify a trend is look at which way price action is moving on your price chart, right? If you're moving from the top left to the bottom right, you are bearish, right? If you're moving from the bottom left to the top right, you are bullish, right? If you're going sideways or you just can't tell, you're in consolidation. This is a perfect example of consolidation. And you can see that recently, right? We have a potential advanced pattern formation forming right here. Again, I'll take my X to A right here, A to B. I love that it saves me so much time. X to A to B, B to C, C to D right down here at 68.53. We have a potential bat completion here on the daily of New Zealand Swiss. And if I do something like this, right, let me just click the history here. It may take a while. Oh, look at that, right away. If I just take the history here, right, again, this is our pattern recognition software. You guys will get this with the 14-day trials. You can play with it and see all the coolness. But you can see, look how many pattern formations have formed just during this past level of consolidation. We just look at this level right here. Now, obviously, they don't all work out, right? It's foolish to think that anything works 100% of the time, but you do have a few good ones. You got a nice little cipher here. You got a nice little butterfly right there. You got a cipher winner right here. Looks like you got a busted butterfly here, a busted, what is this? A small busted cipher in here. Looks like you probably would have won. I'm not going to count it up. You can bring it up on your chart and count it up. But again, consolidation breeds pattern formations. And if this isn't a good example of it, I don't know what is. Also, right, if you guys are trading patterns, and I advise, despite having this software, I always tell our clients, right, practice identifying them yourself. You know, call me old school, or call me conspiracy theorist, but I always believe in learning a skill for yourself, not relying on a software to tell you what it is. You don't want to rely on a crutch, because what happens if for some reason we go out of business and you no longer have access to the pattern recognition software? Now you're left with really no skill and no way to feed yourself through the markets. So I always recommend learning how to building your RES, learning how to identify them yourself. But here's a cool trick that you should do, right? So you look at a chart like this and you draw on all of the pattern formations that you see, right? You go this, okay, I think that's one, okay, that's one, blah, 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 blah. And then when you're done, that's when you click this history button and you compare. Did I miss any? Did I have any that the system didn't agree with or the program didn't agree with? And that's how you learn. And that's how I would advise using this tool. And I say that because we, despite preaching that message, we always get people that are just like, I'm just going to take whatever the software tells me to take because it's my shortcut to trading success. And if you take shortcuts, you end up getting cut short, right? That's the saying. Or at least, I don't know, maybe I just made that up. But if I did, it's my saying now. Copyrighted. Inside joke for you guys that know what I'm talking about. But anyway, let's get back to another pair here. Where do we want to go next? Let's go to Euro Aussie. I'm running out of steam. I'm running out of steam. Try to do this as quickly as possible and not make this an hour-long video. Typically, it takes me about, I'll spend about 45 minutes to an hour running through all my pairs. Now, in this particular situation, these aren't all the pairs in my portfolio. I cover a 9-pair portfolio. But I did look through all of the currency pairs this week because just some changes that maybe happened to my personal trading and for practice as well. But Euro Aussie right here. Again, you're going to get bored with this. Daily chart. We have another pattern formation. Oh, sorry, I didn't want to do that. Let's do this. X to A to B. It's already filled, right? B to C, C to D right down here. It has already technically filled, but it is basically at market. So this may be something that's available for you on the Sunday open. We can also go down to the lower time frames here on the Euro Aussie. And you can see that price is actually double bottoming down here as well. So you get a nice little retest of structure here at our decompletion. Nice bullish divergence on the RSI, right? Equal lows in price, higher lows on the RSI. Not a bad trading opportunity for those who trade this pair. Obviously, I need to reload my data a little bit, but we're at a pretty decent, basically at a neckline of a head and shoulder, a double-headed head and shoulders as well. All right, nice and fresh. Here's what I was saying. I say this could end up being the neckline of a potential head and shoulders as well. You can see if I just draw a horizontal line in right here, you can see obviously we've come to a previous level of structure support, one of those structure swap areas where we have resistance up here, we have support down here. Now this is pretty cool. I've been reading this book by Peter Brandt. He's one of the traders that I really look up to. I love his philosophy on the markets. If you're familiar with Peter Brandt, you'll know why, because you're well, if you're familiar with me and familiar with Peter Brandt, you'll know why, because we both kind of preach this lesson that you don't have to be a 99% trader to win, right? I'm about a 55% trader historically. He's about a 40% trader historically. He's one of the best traders of all time. But he calls this level the ice zone, which I'm a little bit jealous, right? Because I call it a structure swap, which sounds kind of corny. But he calls it the ice zone because if you can imagine this as being a sheet of ice, right, on a lake, right, or any type of body of water, right, the ice works as a barrier, right? For those walking on top of the ice, right, the ice supports you, right? It stops you from falling into the water. For those swimming or stuck below the ice, it kind of works as a ceiling, right? It's a guard against you getting above it. So it's a pretty cool analogy, and I wish I would have thought of it instead of structure swap. But it is what it is. I get paid to be a good trader, not come up with clever terms, but a little mad about that one. But anyway, we're right at this level. If this is going to be a head and shoulders pattern, which it could be, right, a double-headed head and shoulders, we would see a shoulder, right, a right shoulder form, which should come, if it's a symmetrical one, come into the vicinity of our left shoulder before breaking to the downside. And if we know our rules about pattern formations, right, we're only looking for a brief pullback with pattern formations. We're not looking for a full extension. We're not looking for a big continuation of the trend. There are some instances where we can project that, but typically pattern trades come during areas of consolidation, right? They come where the market is coiling. They come as potential reversal patterns or short-term reversal patterns. So we can easily, easily is probably the wrong word, but the target potential for this pattern doesn't come at a place where you should be scared to take targets at, if that makes sense. If not, we'll go over it at another time during the week. But next, let's head over to Euro Pound. And we'll take a quick break after that. At least I'll take a quick break after that. Let's go to Euro Pound. I know we've got a few patterns forming on the Euro Pound as well, if I remember correctly. All right, yep, Euro Pound, so another advanced pattern formation here. This is going to be another Gartley by the look of it. Yep. Swing low to swing high, X to A to B, B to C, and a CD completion right down there at 86.97. So right beneath that 87 even handle. Probably a little bit easier to see on the 4-hour chart. But again, for these purposes, we're just doing kind of a brief overview of the markets here. All right, so just to break up the action a little bit, if you like hearing the story about my evolution as a trader, because again, I come from the same place as you guys. I didn't go to a fancy school. I actually dropped my major in college because I was almost failing 2 economics classes. So I come from basically a know-nothing point to someone that has just worked his tail off and acquired the skill and obviously put in the effort to become a consistently profitable trader. And if you like hearing about that journey, because I know many of you guys are either doing the same thing or have ambitions to do the same thing, make sure you check out the Trading Coach podcast. It's available on different music apps, on Spotify, Apple Music, iTunes, SoundCloud, Stitcher, different apps like that. Or you can go to our Tier 1 Trading website right here, tier1trading.com/the Trading Coach podcast, or even on this YouTube channel. Right underneath, there's a playlist. But pretty cool episodes, if I do say so myself. I like to keep them fun. And what I like to do is I like to take the questions that you guys ask. So whenever you put a comment or ask a question under YouTube, Twitter, Instagram, wherever you guys are following me at, I like to take those topics and put them into a podcast episode because I know you're not the only one asking that question. I know it may seem like that, right? That's one of the coolest things about the community chat we have on our platform is that traders start to realize that, hey, I'm not the only one that is unsure about this. I'm not the only one that thinks this way, and it gives them more confidence to kind of recognize their flaws and work on them. I want to do the same thing for you guys as well. So make sure you subscribe to it. We're closing in on 100,000 downloads, which is pretty cool, seeing how I just launched a podcast, 30 episodes ago. So I'm excited about it, and the reviews have been great. You guys have been doing an awesome job of sharing it and whatnot. So I appreciate it. Keep it up and check it out if you're new. Short and sweet, about 15-minute, 20-minute episodes. Now, let's get back to the charts. And let's head over to the Euro New Zealand. Euro New Zealand, right? So we just talked a little bit about, on the Euro Aussie, about potential head and shoulders. Well, here's a pretty cool one, right? We're going to start at 240 and then we'll work our way back up. Let's just start here, right? You can see that price action is coming into previous structure right here. And this is setting up a potential head and shoulders pattern. And we just came off of another head and shoulders pattern. So here's what I mean, right? So we'll keep that little level of structure in mind here. But if we take a look here, we got a very beautiful head and shoulders pattern right here. Boom. Left shoulder, head, back down, little tweezer bottoms at the neckline. Beautiful, right? And we rallied off of that level all the way back down in the previous structure. Now, this is going to be a potential buying opportunity here as a structure-based trade, right? Look left, structure leaves clues. This is a very nice candle formation right here, right? This high momentum to the low side, indecision candle, high momentum to the upside. Very nice area to look for potential buying opportunities at. But if we look bigger picture, again, going out to the daily, right? Once again, you could be playing the potential move to the right shoulder. So you could be playing the potential move back up to this level of structure. I wouldn't go past this level. At least I'd take some profits off past this level. And then once we get here, and again, this is, remember, weekend analysis, so I'm projecting kind of my game plan for the week ahead. Once we get here, right? In this zone, we can also look for shorting opportunities in potential of that bigger head and shoulders to break down. And obviously the neckline, the formation of the neckline and the break of the neckline is what's going to validate the head and shoulders. But we may have an opportunity to get on based on a structure-based trade in advance of that. So the first move is looking for a structure buy right down here. If we get that move, the second thing on the radar is going to be looking for a structure-based, a pullback short right in this area. And again, remind you one more time, these aren't trading calls, guys. Obviously, don't listen to what I'm saying, follow your own plan. But the point of this analysis, and again, why I want to show you kind of what I do during the weekend versus the intraday stuff that I do, or the during the week type stuff that I do, is because this is all game planning. I don't know if this is going to happen, right? Nobody knows, right? If anyone ever tells you they know what the market is going to do, they're just flat out lying. We never know what it's going to do. It's our job as traders, right, to predict. And then we just don't act on those predictions right away. We wait until price confirms or the market confirms that prediction, and then we look to get involved. And that's one of the biggest differences I see between experienced traders and newer traders, right? A lot of newer traders have an idea and they immediately act on that idea because they think it's right. Experienced traders have an idea and then they wait, right? They wait until the market confirms that idea, or at least gives you enough clues to make a very well-educated guess, and then they get involved. And that's how they limit that risk. And I say that because I see it time and time again. I see people that watch my trading ideas and watch my videos and they're like, well, Akil, on Sunday you put out a video that said you're looking to buy the Euro New Zealand right at this level, and price action just fell right through, and I just took a big loss, right? And it's just like, say it's just like one big red candle. And I'm like, man, sorry to hear that. Well, yeah, man, it stinks that we lost his trade. I'm like, we? Like, dude, I never got involved in the trade. Well, why not? You said this was a potential buying opportunity. Yes, potential, right? As soon as the big red engulfing candle went through there, it no longer became a potential, and the idea got shifted. And the truth is, as a trader, you know, for every 10 times we do analysis, right, only one of those trading opportunities is going to come to fruition. The key is that we're able to take advantage of it. And that's actually going to be a podcast episode in the future, since I just shamelessly plugged it. But let's get on with the show. What do I have next? Canada yen. Let's go to Canada yen next. This is another one that we've been watching in the live room. We actually had one of our live room members had a very good trade here last week, and it's given us another chance. So this is similar to the dollar yen, where we've had a breakout, right? We projected the breakout last week, and now we're asking ourselves, is there room for this breakout to continue? Where's the next place this breakout is likely to go to? And the next level I would predict is about right here, about 87.50s, maybe a little lower than that, but let's just call it 87.50s. And you can see right now we're trading at 85.92. It's called 86 flat. There's still about 150 pips of space here. So the question that I'm asking myself as an intraday trader is, how can I take advantage of any buying opportunity in here? It doesn't mean catch the entire move, but looking to get involved as a bull instead of a bear. And as we go down to the 240 chart, you'll kind of see what we were looking at earlier in the week. We had price action come up to previous structure resistance right here. We had a nice bull flag pattern right above this level. It doesn't get any better than this, right? Because we had the higher high, higher close, which confirms the bullish move. And again, when you see the Emergence training course, this will make perfect sense for you guys that are new. But we had the higher high, higher close, giving us confirmation of the bullish move. And then we had a flag formation, right? So the market consolidated right above those highs. And this is a no-brainer buy for a breakout. And you can see we got the breakout here. And now we're starting to get a little bit of a relief as profits start getting taken, right? You know, the people that bought here, right? They've got to take profits at some point. So you see a lot of sell orders flood through the market. Now we're coming back to test that flag pattern, which is going to offer opportunities to buy once again and catch that next potential leg up. So if you're an intraday trader, this is going to be something that you're certainly watching during the week for a chance to get long on kind of the second leg of this move. Next up, let's head to the pound Aussie. Come on, Akil. You're going to make it. Just one more pair after this. One more pair after this. All right, we're gonna skip past the pound odds. That didn't really have anything that needs to be mentioned right here. We can revisit that during the week. But the CAD Swiss is the last one I'm gonna go to. Once again, I'm on the daily chart here, and you can see that we've just reached a previous level of structure resistance, and once again, the market has reacted off of that resistance level, and we've come down into our last area of previous structure support. You can see a nice little structure swap right here. If I give my corny term one more time. Would not surprise me if we saw a little bit of reaction at this level and maybe a retest of that resistance one more time. Who knows if the buying pressure will push past it or not, but certainly wouldn't surprise me to see another thrust up in this level. And what we have as we go down to the lower time frame here, the 4-hour chart, is going to be another advanced pattern formation, right? We take a look at this and we go swing low to swing high, our X to A to B, B to C. You're going to see we had a CD completion right down here at about 77.31. Price action closed at 77.34, so we're trading right near that level. Again, could be an opportunity to take advantage of a trade that happens at market. So I hope you guys enjoyed this video. I know it was a lot. Do me a favor. I do this video on the weekend for free. All I ask in return is a comment, a like, and a share. If you can do those three things, it means the world. Just a comment, hey Akil, good job, or a comment if you have a question about a certain pair. A like, that's just taking a second to hit that little thumbs up button below this video, and a share, right? I know a lot of you guys are on social media, Facebook, Instagram, Twitter. Just, take a screenshot, share it, say, hey guys, if you're into trading or here's something that I'm looking at over the weekend, that is a massive help for us growing our community. One of the biggest things that we've heard from the clients that we've worked with since we've launched the Tier 1 trading is that they love the community aspect. We've always wanted to do kind of a chat, but chats typically always turn toxic. So we're always looking for good traders to work with. And that's one of the reasons that we charge $1 for that 14-day trial, right? We found that if you just give it away for free, you invite the scum of the earth, right? A lot of the scum of the internet land will come and toxify your area. However, if you offer a $1 trial, it's amazing how much just $1 separates those who are more serious about trading versus those who just want to come in and disrupt. So we're trying to grow a great community. If you're watching my video, I know that you are a trader with the right mind, typically because I piss off the trolls where they enough so they don't want to hear what I want to say. And if you're a trader with the right mindset, you typically hang around other traders with the right mindset as well. So share this video, hit the like button, leave me a comment. I will see many of you guys during the week because I'm assuming you're going to take advantage of that free 14 or that $1 14-day trial. So I'll see you guys in the week in the live trading room and during the week with the Trading Edge videos. And if not, I'll see you most likely next week here on YouTube for another episode of the Weekend Trading Edge. Until then, traders, plan your trade, trade your plan. Off to do the editing process. And I'll see you guys next week. Take care.